Welcome everyone to Vested Interest. This is Shane back again with another portfolio update. And before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time, on this channel we focus on dividend growth investing, buying stocks in good companies that pay growing dividends and hold them for the long term. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible so it really boils down to consistently investing dollar cost average into dividend growth stocks and growing companies with positive cash flow that covers the dividend and have a high return on their invested capital. I cover all my investments into the portfolio every week. That's what this video is. We're going to cover all the options that we were in, any dividends paid out, any buys or sells that we made. It is completely free to see what I'm doing. We all have enough to pay for, so you'll see this every week. But if you would like to help the channel, go ahead and hit that thumbs up. If you find value in the content, hit that subscribe button and hit the notification bell down below so you are notified whenever we put out any new content. Join us on this journey to financial freedom. Join the Vested Interest community and drop a comment down below. Let me know what you did in your portfolio this week. Did you add to any positions? Did you sell out of any positions? Are you doing any options on any of your holdings? And overall, how's your portfolio doing? I know mine is down again, right, after going up quite a bit. But that's the nature of the market, the ups and downs, and that's part of the reason for this channel as well. I want you to see a real portfolio built out by a, everyday average Joe citizen. I do not have a financial background or a financial degree. My company or my family is not wealthy by any means, so I didn't learn from my dad or uncles or anyone who has a portfolio or who might be a investor from the past. I'm learning this all on my own, so I want you to see what I'm doing, see the mistakes I make, see the good that goes on in the portfolio, and really, like I said, just see a portfolio built out over time so you can see the ups and downs of the market, and hopefully that helps everybody out. So let's jump in to the video and see what happened in my portfolio this week. So options, this is going to be quick. No options to cover this week. I threw out 2 or 3 hits. NTR, Nutrien was one I was running an options play on. Pfizer, another one. That one continues to seem like it's dropping off the map. So whenever companies have big swings like that, drop by 3 or 4% or more on a week, or go up by 3 or 4% or more on a week, it's hard to get options plays on them. So I threw out a few more this weekend. Actually did that this morning. I'm recording this on Saturday morning. You'll see it on Sunday morning. And threw out a few more hooks. We'll see what happens. I still threw out some on Nutrien, Pfizer. I added back in Bank of America. It seems to be dipping again, so I wouldn't mind trying to get some more shares at a cheaper basis there. I may even look at Verizon. Looks like it's dipping again, so I think I threw out one on that. So I threw out 4 or 5 this weekend. We'll see what hits on Monday morning. That's really how I do it. I set up those plays on the weekend, either Saturday and Sunday, and then whatever hits, hits. Whatever doesn't, we move on to the next week, just the way it is. My plays are pretty conservative as well. I'm trying to hold the positions while collecting options premium. I'm not really looking to sell out of the positions, though. If I was looking to sell out of a position, I would set a target price I wanted to sell and run options until it hit it and collect options premium that way. What options were you in this week, if any? Let me know in the comment section down below. Let's keep going. So on to dividends. Well, not only did we not receive any options premium this week, we did not get any dividend payouts this week either. So quick slide here. We'll jump to the next one. And on to February 6th, the first new capital invested for the week. We did enter in some positions or buy some positions early in the week. We added $1,081.97 to the portfolio. With those funds, we bought 10 shares of Alibaba Group, ticker BABA. This is out of the consumer discretionary sector. And we did pay a little more than what they ended the week at, $76.70. And that's just the way the market goes, up and down. I'm not going to buy at the bottom. I'm probably not going to buy at the top unless by circumstance or happenstance or pure dumb luck. But I am willing to buy Alibaba, and I'm trying to get to 100 to 120 shares here. So long as it stays under $80, I'm going to continue to add to this. Whatever the price is, whenever I want to add, I'm going to pick up 10 shares, and that's what I've been doing for the last several weeks, 10 shares in a batch. So we picked up 10 more shares of BABA at $76.70. I think it ended the week around $72. So again, we could have got this a little cheaper, but that's just the way it goes. And just a quick note on Alibaba. This is a Chinese company, so I know there are going to be people out there who don't want to invest in the Chinese stock market. That's completely your decision. But for me, this one is just very cheap right now. Price to sales, price to book, all along the lines, different metrics that you look at for this one. It is a very cheap company. So again, I'm going to add it, and I think it's worth the risk on this one. Now, we did add 4 more shares to another existing position here, HP Inc., ticker HPQ, out of the information technology sector. We picked up those shares at $28.35. Nutrien, we've been adding to this one relatively consistently over the last several months, really. Ticker NTR. This is a Canadian company, so that there are some tax implications you should be aware on this one. This one is down significantly below my cost basis, so I added 4 more shares at $50.40 per share. All total, these new shares picked up with this $1,081.97 adds an additional $22.88 in passive income over the next calendar year. And we weren't done. We went back in and added $366.94 more in new capital. On February 9th, we picked up 1 share of a brand new position. This is one we are just starting. We were going to build this one out just like BABA, probably over the next several months. 1 share of Comcast Corp, ticker CMCSA. This is out of the, like Verizon, it's out of the communications sector, though it's a little different company than Verizon. It just happens to be in the same sector. And we picked up that 1 share at $42 even. And again, this one we will probably add, maybe not the 10 share blocks like we're doing with Alibaba until we're done building that one out. But this one, like I said, we will build out relatively quickly over the next couple months to at least 100 shares, 120, 130 maybe, and then back off of this one. And then these two are ETFs, our weekly adds. We are going to add 1 share of SCHD and 1 share of VTI every week, regardless of the price. So I don't really even focus on the price over here. I'm just going to focus on adding 1 share every week. So we've got the SCHD Schwab ETF. This is a dividend growth ETF. And we have VTI, ticker VTI, Vanguard Total Stock Market ETF. This is all of the stocks in the overall United States stock market, right? So at a minimum, we are exposed to, and if you want some easy set it and forget it, you don't have to do any research on individual stocks. Looking for something that's a little more passive, ETFs would be the way to do it. VTI or VOO if you wanted to go with just like the top 500 stocks in the stock market. That would be the S&P 500, VOO. Dividend growth investors out there, SCHD or VYM would be Vanguard's equivalent to SCHD here. So any of those would be what I would suggest. There are some other ones out there. If you're looking for like a VUG, would be more along the lines of information technology. So there are some other ones out there. If you want to just get into individual sectors, you could do that as well. So ETFs or index funds are an easy passive way to invest into different sectors or the overall market if you want. That's really up to you. So I added these in for you folks out there who are ETF investors. All total, the $366.94 and the 3 new positions here added $8.20 in passive income. Total invested $1,448.91, and that $1,448.91 added an additional $31.08 in passive income over the next calendar year. Now on to a quick update on the sector weights. Communications makes up 9.12% of the portfolio. Consumer discretionary sitting at 3.85%. Consumer staples at 11.89%. Energy sitting at 6.17% of the portfolio. Financials, 8.23% of the portfolio. Healthcare first. Healthcare, 16.99% of the portfolio. Industrial sitting at 7.91%. Technology, 7.56%. Materials makes up 11.73%. Utilities at 4.52%, and REITs and real estate sitting at 11.09%. Last but certainly not least, the ETF portion still under 1% of the portfolio at 0.95%. So I think ETFs will always remain one of the smaller pieces of the pie. Eventually, we'll probably try to even it out with the rest of them. But overall, I consider my whole portfolio my own ETF that I am building out. Over here on the right-hand side, you can see the portfolio sector weights broken down by position here. or sector here, right here, that matches the pie. And then you can see the dollar amounts associated as well. Now on to the overall portfolio update, what a lot of you come here to see. Every week, again, I show this whether the market's up, whether the market's down, whether the market is floating sideways, whether I'm in the red or whether I'm in the green. You are going to see a regular Joe, my individual portfolio built out over time. Every week I'm going to show you this so that you can see the fluctuations in the market. Positions are going to go up, positions are going to go down, the market's going to go up, the market's going to go down. Don't let that be a hindrance to you investing. Don't let it scare you out of the market. Don't let it scare you into selling positions that you hold. If you understand what you've bought, if you understand the metrics and believe in the company, you should hold it long term, even if it goes down. You'll see, I'm down 16%, 11%, 57% on MPW. If you believe in and this one is probably my most risky play beyond BABA right here, MPW. So we're holding it. I'm going to continue to hold it even though I'm down 57%. And I'm hopeful that eventually this company will rebound and recoup these losses. Now that may never happen, and if over the next couple years it does not, eventually I will probably look to trim this position, maybe sell some covered calls on it to try to recoup some of this loss, or I'll just use it as an opportunity for tax loss harvesting to offset some of the taxes I would otherwise pay on my gains. So there's ways to play these positions, but for overall, I mean, these are pretty standard Bank of America, Ally, Comcast, Cisco, CVS, Enbridge, Enterprise Product Partners, HPQ, that's HP Inc., Haverty Furniture, Johnson & Johnson, Kraft Heinz, Kroger, LyondellBasell, that's Medical Properties Trust, NextEra Energy, Nutrien, O is Realty Income, the monthly paying REIT, Owens Corning, that's an industrial sector building supplier, like shingles, insulation, that sort of thing. Omega Healthcare Investors, that's a real similar company to MPW. And this one was actually down last week. Omega, I wish I would have added to it, actually. It dipped briefly below my cost basis, but then boom, right back up again. Pfizer, down 24%. I'm not selling it. I've been nibbling a little bit on that one. Procter & Gamble, SBSW, Sibanye-Stillwater. This is a African mining company here. SCHD, that's the Schwab ETF there. Cisco, that's a supplier of that's out of the consumer staples sector. That's a supplier of food products. AT&T, ticker T here, that's out of the communication sector. I know that's one that a lot of people don't like because a lot of people are down. I'm down again. I was up on this one, so I may nibble on that one again. Verizon, another one I might nibble on now that I'm down again. I was up there too. Union Pacific, Vale, that's a mining company out of Brazil, VTI, Verizon, and Williams and Sonoma. Wish I'd have bought a lot more Williams and Sonoma back here. Only 2 shares up 81%, right? Would be a nice one. I've actually thought about trimming this one out of the position. But overall, you can see here's the tickers. Here's how many shares I hold. Current price as of the close of business on Friday. Current market value, again, as of the close of business on Friday. My average cost per share. My purchase price, how much I have into each position. Total return, whether I'm up or down, you'll see it in this column. The percent return here, again, if I'm in the red, you can clearly see that. If I'm in the green, you can see that as well. I'm going to show you this every week. I don't care if I'm up or down. That's not what I'm focused on. What sector each company falls in, whether they're quarterly, monthly, or semi-annual payer. Current dividend yield as of the close of business on Friday. My yield on cost here. Portfolio weighting. So on the previous page, we saw the sector weights. Here's the individual weighting of each position. Estimated annual income here. Payout months, what months the positions pay out, the dividend growth year over year, and where they sit of 15% of their 52-week low. I use this as a gauge to tell me how much I want to pay for a position whenever I'm entering into it, or how much the max is I want to pay to keep my average cost per share under, right? So for example, let's look at, where's a good one here? 34, maybe it's, well, let's use BABA. All right, BABA here. So my cost basis is $73.09. You saw that I bought it at $76. I know that it's back down there. It closed the week out at 72. So technically I should have waited, but I can't see the future. It could have went from 76 to 78 just as easy as it went from 76 down to 72. That's just the way the market goes. But I'm willing to buy this. The reason I was willing to pay $76 for it is because 15% of its 52-week low is $80.59. So I'm willing to buy this as long as my cost basis stays under this $80.59 per share. So I'm even willing to pay, $81 per share. If my cost basis was $73 and I wanted to add 10 more shares and it was going to bring my cost basis up to $74, I would go ahead and add those 10 shares, even though it might be over this 15% of 52-week low. So that's how I use that. I want to keep my cost basis under where it would sit at 15% of its 52-week low. And this will adjust over time, right? There are companies last year that I wasn't adding to that recently I can add to again, because that number where it sits at 15% of its 52-week low has increased year over year. And that's another reason that I like to use this. A company that's really run up, like Williams and Sonoma, for example, I'm willing to let my cost basis be $125.60. This was actually lower than my cost basis at $121. So since another year has passed, I can actually add a little bit to this. I could probably add 2 more shares. My cost basis actually might go slightly above that, so I'd have to do the math before I did that. But it is a way to add to positions that might be over my cost basis, but still keep my overall cost basis under where it sits at 15% of its 52-week low. I hope I explained it that way in a way you can understand it. So total current shares, 5,978.309. Market value is sitting at $206,600.27. I have $205,660.59. It's amazing to me to think after, almost 3 years, or right around 3 years, I've put $205,000 into the market, but that's just the reality. So I'm gonna pat myself on the back for that. I've been very aggressive over the last several years investing into the market. I'm going to continue to do so for at least the next year, and then maybe back off. I probably won't get the $60,000 to $70,000 I've been investing in because I want to do some other things, maybe buy some real estate. I'm hoping that the market turns south on real estate and I can get into a couple rental houses. But right now, I'm very aggressively adding to my portfolio and adding to the market every week. Total return, it has shrunk a little bit, $939.68. That's all right. We're up 0.46%. Current yield is sitting at 4.58%. My yield on cost slightly higher at 4.601%. And this, I'm not focused over here, right? Not focused on the weekly, monthly, quarterly fluctuations, whether I'm up or down. I am focused on the annual dividend income paid out from all the positions in the portfolio. Continues to grow, whether the market's up, whether the market's down, whether the market's floating sideways, setting currently at $9,463.17, and again continues to grow week over week, month over month. And here is the estimated dividend growth over the next calendar year. Well, that is it for this one. Drop a comment down below. Let me know what you added to your portfolio this week, or sold, or if you're in any options plays or dividends paid out. Really love to hear from you guys. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, stocks we're watching, stocks we're buying, stocks we're avoiding altogether. We can't benefit from each other's investing, but we can certainly benefit from each other's tips and tricks that we've learned along the way and experiences all together as a community. Hit the subscribe button and hit the notification bell down below. It really does help me out, and I do personally read and respond to the comments, and I'm always interested to read your questions and or opinions, suggestions for future topics. If you watch the Stock Pick of the Day series and you'd like me to cover a company, drop it down below and I'll work into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investor journey for educational and entertainment purposes. Investing involves risks and money. Should never invest any amount you're not comfortable losing. Always do your own research, invest in your situation, circumstances, and select criteria, or seek the advice comes from a certified financial advisor.